Hey guys, what's going on? Welcome into the video. So we have a super important week ahead in the stock market with a major catalyst coming up to get ready for. So in this video, we're going to talk about that major catalyst, some scenarios to watch and how to trade it, and then I'm going to go through some individual trade ideas along with that for the week ahead. So without further ado, let's go ahead and get on into it. So starting out, the major catalyst that we have coming up is the CPI data release, and that's going to be on Wednesday morning at 8:30 a.m. Eastern Time. So the current consensus estimate for this CPI is coming in at 5.2% year over year and 0.3% month over month. So generally speaking, the market always wants this number to come in lower than expectations, which shows that inflation is coming down quicker than expected. But as always, the market's reaction to this data is most important. I always like to run through some general expectations and scenarios for these events using the S&P futures chart. I like using this chart more than others for a couple reasons. The S&P is the most watched and the most traded index in the market, and the futures chart for this shows the full picture including the overnight price action and will react to levels and trend lines most accurately. For the most part, if the S&P is trending up, there's a high probability that individual stocks are as well and breakout setups will work, and the opposite if it's going down and breakdown setups will then work. Alright, so before I run through some scenarios that I'm watching for this week, let's take a look at what I laid out last week. So last week we talked about how the market was very overbought and in turn should expect a pullback in the week ahead, and that is exactly what we got. The bull scenario that I laid out was to expect a dip next to open up possible downside to the 40-60 level, which was the previous major breakout level, before potentially a strong bounce and upside follow through from there. The bear case that I laid out was that same type of pullback, though a weak reaction at around 40-60, in which a break below there starts the real bear case. And after last week's reaction, here we are now. We got the start of a pullback off that key trend line that we talked about, and the S&P ended up finding support at about 4,100 and bounced from there. So a couple things now is the overbought conditions have cooled off enough to where there's room for a leg higher direct if the market wants to go that way, but my personal lean continues to be that we will likely see a larger pullback first. So before we get into some scenarios for the week ahead, there's a couple new key patterns and levels to be aware of. The first is this rising trend line continues to cap the market's upside where rallies get sold into. And second, this has now built a strong pivot level at 40.98 to 4100, which will be my key bull bear pivot for the week ahead. The major level below there is the white trend line that triggered the major breakout 2 weeks ago. That becomes a must hold support of any backtest of the level now, and as long as above there, buyers are in control of the overall broader trend. So now getting into some scenarios for CPI data in the week ahead, it's important to know that CPI events usually result in big moves for the market and often can have two big directional moves. Just for example, the CPI data from October had a 3.5% initial move down and then a 5.5% move up. Some traders stay away from trading news events like this, but these are my personal favorites to trade, and scenarios like this are seriously a trader's dream. If you're confident in your levels and technical analysis, news events like this are the most lucrative to trade by far. Alright, so now getting into the scenarios for the week ahead. To start out, expect Monday and Tuesday to be relatively slow days, most likely, as the market rarely makes big moves before important catalysts, and expect the big move to be made on Wednesday. So on Wednesday, if the market sees an initial reaction to the downside, the first important spot to watch is 4,100, and if that breaks, expect to move down to the key trend line at 40.58 to 40.60. Now this is a must hold support for buyers, as the real bear case would start below it, but dip buyers have been relentless recently, so if this level does get tested, there's probably a strong probability that it will hold. If so, this could pop back above 4,100, and a break back above there would trigger a big short squeeze and likely see continuation higher for the market, with the next big target above at 4,200. Setups like this are by far my most favorite to trade and are the most explosive. For example, if this played out, we would see a ton of shorts come in on the break below 4,100. From there, if 4,100 is reclaimed back above, all of those shorts that shorted the breakdown become trapped and are underwater big time and will end up getting squeezed out, which adds a ton of fuel to the fire towards the upside. So the next scenario that I'm watching for starts the same with an initial reaction to the downside and the breakdown starts below 4,100. From here, it would be likely to see a bounce off that 40.58 to 40.60 level, but this time around, sellers are able to defend 4100 as new resistance, making a lower high there, and then the real bear case would start on the break below 40.58, likely result into a move down to 4000 to 4010 next, which was the key pivot zone from 2 weeks ago. Okay, so these next scenarios will be initial reactions to the upside, and I had to zoom out a bit for this one to show the upside levels. So this one would be the initial reaction to the upside where the breakout starts at about 41.55 and then targets 4200 next, and from there makes its way up to the major resistance at 42.50. If this plays out, I would be stalking that 42.50 level as a major short opportunity. This white trend line has marked both of the two previous tops for the market. If it was to be tested again, there would be a very good chance for the same to happen, and at the very least, a multi-percent pullback off of it. So the next scenario would be an initial upside reaction as well, where the breakout starts above 41.55, makes it up to around 4200 before a strong reaction there, and if it fails back below 41.55, that would be a failed breakout and likely result into an all-day fade back down to the downside, which could then target 4100 first, and below there the key 40.58 to 40.60 level. Okay, so now taking a look at a couple individual trade ideas, starting off with Google stock, ticker symbol GOOG. So this one bounced nicely off its 200-day moving average and broke above the key 105 to 106.5 resistance zone last Thursday. So this has been held down for a while, and if the market stays bullish, this could catch up to its other big tech counterparts. In the week ahead, this can see a leg higher on a break and hold above 109.2, with upside above to the 110.85 gap fill, and then 113.36, and then 118 above there. As long as this holds above the 105 to 106.5 zone, this setup is very bullish, and an ideal scenario would be to backtest that zone before moving higher, and that could potentially play out with the dip and rip scenario that we talked about with the S&P. The next one we're going to take a look at is Alibaba, ticker BABA, which had a strong move on heavy volume after news a couple weeks ago, and is now building out a great looking bull flag after reclaiming above the major 50 and 200-day moving averages, along with the 95 to 100 key zone. As long as this holds above there, this pattern stays bullish, and this can see the leg higher above 105, which targets 110 next, and then above there the key 120 to 130 major resistance zone. So right now for the broad market and the S&P, there has been a buy the dip mentality from the market, with pretty much all dips getting bought up. So that should be the lean in the expectation right now if we do see that dip next week. But if proven otherwise, which would be a break below that 40.58 to 40.60 zone talked about on the futures chart, there would be a likelihood that we go from a buy the dip market to a sell the rip market, and if so, I will be posting some bearish setups on my Twitter at the Stockwatch2, so make sure to follow me there if you're interested in that. But for the most part right now, technicals continue to be bullish. So that is everything that I'm watching for in the week ahead. Hope you all enjoyed, and hope I provided some value to you. If so, make sure to hit that like button and subscribe button down below. It helps me out a lot, and I would greatly appreciate it. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch list, and you can ask me any questions there. Thanks so much for watching, guys. I will catch you all next time. Good luck trading this week. We will likely have a volatile one. Peace out.